Hi, this is Randy Finney with the right side of the chart, and today is Wednesday, December 2nd, 2015. It's about 1:40 p.m. Eastern Time as I'm doing this video, and I just wanted to do a follow-up to the recent video that I did on gold, GDX, and some of the currencies, as well as quite a few posts that I put up yesterday. I've shared my thoughts throughout the day within the trading room and figured I'd just put it in a quick try to do a quick video here of just what I'm seeing in GDX, what's going on, especially with this pullback today. What I wanted to talk on is yesterday, I had mentioned, or even going back a couple days ago when I did the video, that this downtrend line, this white downtrend line that I'm highlighting here, that was the one I stated we'd have to take out, that if GDX took that out, that would likely spark a move up to the 1450, 1460-ish area. Keep in mind, I always set my price targets below the actual resistance level. In this case, you can see that line's at 1453, and I don't even have these lines zeroed in. So just know that as I mentioned in the post, 1450 to 1460. But again, I don't try to eke out the last penny in a trade. That's why my targets are set a little low. So what has happened since then? We did take that trend line out. Then yesterday, I believe it was, I started mentioning that 1405 was also a key level, and that is because we had these reaction highs back here from the 19th and 20th of the month, and then we had this big gap back here earlier in the month, earlier in November. And so if I put my cursor on that horizontal line, which is right at 1405, you see it defines the top of that gap as well as these reaction highs. So, I still maintain that that was a key level. And clearly, what happened yesterday, that was a false breakout. Now, admittedly, I should have caught the fact that gold and silver had the resistance levels that I put up yesterday afternoon. I should have caught that earlier. For those of you who have followed the site for a while, you know that I constantly reiterate, when trading the miners, you have to keep an eye on the charts of gold and silver. Because ultimately where gold and silver go will determine where the miners go. Sometimes they like to get a little jump start, a head start on what may be a reversal in gold or silver, in which I think happened here. However, as I said late yesterday, until and unless gold and silver take out, and I was referring to those similar downtrend lines like this on the 60-minute chart that gold and silver have, until that happens, any advances in GDX will be limited. And so again, hindsight's 2020. I did point that out. I caught it. However, I still think those trend lines will be taken out. And what's happened in GDX, I'll get to gold and silver in a minute here. Simply what's happened is just a pullback. We had a breakout. We failed to maintain that 1405 level. We printed two candlestick closes above it, two 60-minute candles, and then fell back. And all we've done is come in to back test this. Now, yeah, I see a candlestick here with a very long wick, but you can see we hammered right back up. I mean, within pennies, just underneath that trend line. So close enough to say that that was just a washout move. I often talk about when trading any particular time frame, it's the candlestick close on that time frame. So in this case, on a 60-minute time frame, it doesn't matter that we came down here, we had that reversal, and if anything else, that just helps the bullish case because that's a washout move for those that might have said, oh, well, that level's now taken out, that trend line break, and it probably ran a lot of stops, but you can see the buyer stepped in and took GDX back up almost immediately back above that downtrend line. So far, to put it in a nutshell, we had a breakout and a back test. And so far it's been a successful back test, meaning that prices have started to move higher. Still some work to be done. 1405 is still a key level. Just because we had that move above there yesterday does not negate the validity of this horizontal resistance level, 1405. Now we also have to take out yesterday's highs. So this will be the next bullish technical event. More so, of course, we do need to see 1405 get taken out and a close above that, but now we have to also take out yesterday's highs around 1420. And in doing so, that'll open up the door for that continued move higher. Now let's real quickly take a look at the 15-minute chart. I answered somebody in the trading room today who asked about my thoughts on the pullback here, how much lower will it continue, or is there a chance that GDX could reverse? And I had stated I thought it would reverse, and I mentioned cited a few factors here, which I'll talk on right now. Uh, First and foremost, I had stated that GDX is clearly in a well-defined short-term uptrend. By short-term, I'm just going back here a few days. This is a week or a couple weeks back to the 18th of November. And what we have here, an uptrend is simply defined as a series of higher lows and higher highs. And as I'm drawing out here, so far that's what we've had. Notice they're pretty equally spaced. And here's our highs. We have a high here. We didn't make a higher high there, but we did here. So we'd look for, to keep it very simple in simple terms, this uptrend remains intact unless this low is violated. It is possible. I also mentioned that there is some. Let me clear these lines out real quick and put this horizontal line up here. Right around 1350, we have a very nice horizontal support level. If I can get the line on there. That's defined by this gap here. We have several reactions, came very close. Here's a reaction here. Another reaction, a gap. Gaps are excellent levels to, especially if you can line up several of those for support and resistance. We have a huge gap back here. And if you notice the volume at price histogram, that's the green and red horizontal bars coming out of the left here. You can see a red bar that comes out all the way here, a huge red bar. These volume at price histograms, they just basically show you, it's a visual of where the majority of trades on this span of chart, this time span of the chart have occurred. So these often act as support and resistance levels. So you have this large bar here, which coincidentally or not lines up with that 14 or 1350 support level that I talked about. And what I'm getting at here, I can see the possibility the pullback may be over, but by all means, it wouldn't surprise me to see one more pullback, and even all the way down to that 1350 level. Let's say it happened today. Let's say the gold stocks sell off into the close. Well, as you can see, we're still well above that previous reaction low, and it's really keeping that. The spacing isn't as important. It's nice to see that symmetry, but that would still give us a higher low, keeping the uptrend intact. Now, if 1350 goes, there's also some support just below it. I should put that here. I should put a horizontal line up. You can see the bottom of that gap. It also lines up with this reaction low here, et cetera, et cetera. You can go across the board and see the numerous reactions, but that's only a few cents lower. 1349, call it 1348. So this really is my line in the sand, because if we take that out, there's a good shot that previous reaction low will be taken out. Now, if we're going to go down there, I'd like to see it happen today or very soon, and then a reversal up. So really, until that previous reaction low is taken out, we're looking at an uptrend, a near-term uptrend in GDX. You can put this line on here, but I only have one reaction so far, so I won't put a lot of stock into that. But that's what we're looking at right now. There's a series of higher lows and higher highs. So that's GDX. Not a lot to take away from the price indicators, momentum oscillators. On the MACD, it's pretty sloppy lately, and that's because prices are sort of chugging sideways. It is an uptrend, but not a very steep uptrend. So you almost have what you get when you see a triangle pattern, like a symmetrical triangle, where the MACD and the RSI are just trading range bound here. And you can look at these oversold readings. I talk about these on just about any time frame. Anytime the RSI gets above 70, so we see there, and that's where we topped yesterday. You could have sold. Here was an extended run. We had a divergent high, and then it topped. Here was an really extended oversold reading. Again, a divergent high. If I were to do it here, these horizontal lines. I'm sorry, a downtrend line against prices making a higher high, and that marked the end of that. So you can use the RSI and things like the MACD to really time some short-term entries and exits here, as well as the MACD crossovers. I won't do every one. If you look at your MACD histogram, you'll notice that confirmed. That tends to go red right before or early on in a downtrend, and tends to go green early on in an uptrend. So just some other tools you can use there to try to micromanage these trades. Okay, and here's gold. As I mentioned in my response in the trading room, gold, unlike the miners, and this is something to be concerned with because they are diverging right now. The miners, as I pointed out, have been in an uptrend for now going on almost a couple weeks, while gold continues to remain in a solid downtrend, making a new low today. Now that new lows on face value are always bearish because at that point all the buyers or all the holders, I should say, of in this case GLD, the gold ETF, are underwater. So it creates a different supply dynamic there. However, that low was made with some pretty solid positive divergences in place on the MACD and the RSI. In other words, price is making a lower low as shown by this trend line, with the MACD and the RSI making either equal or higher lows. And the MACD is now curled up. Here's that. You can see we have that bullish crossover in place now. You can just barely make out some green bars. But again, these are pretty effective short-term buy and sell signals, not the be-all, end-all, but you can see when the MACD makes that bullish crossover as evidenced by the histogram going green or these two lines crossing, you get a little bit of an uptrend there. It lasts for a couple days or so, and vice versa. Back here it told you to sell with that bearish crossover. And again, also, as I mentioned, see the RSI, oversold RSI, then you get a bearish MACD crossover. So you would have been out right here, avoided that downtrend, and next time it told you to get back in was right here according to the MACD. We'd also just been coming off oversold readings. So those are tools that you can use. Now, where are we at? Look at this extended oversold reading. We've just crossed back above 30. We've just made a bullish crossover after an extended move lower. And something else that I mentioned in the trading room is what I really like to see are these volume surges. I put a lot of, volume's been in recent years difficult to use as a trading tool in many cases because of the increase in high frequency trading and all that. It's not as natural anymore as it used to be with pure supply and demand, buying and selling. However, one thing that I find holds true and useful in volume are these buying and selling climaxes. So when you have an extended down move in a security and you see these white bars here, that is often a selling climax. Likewise, if you had an extended move up and then you see a huge volume surge, that's a buying climax. And those buying and selling climaxes are usually good for a pretty good reversal, an extended move. So anyway, something that I'm watching right now. Here's a selling climax back here. You get a big sell-off in gold, and then see right where I put the crosshairs, you can see that's where the high volume kicked in. So again, not 100%, nothing is in trading, but that's what I'm looking at right now. Bullish divergent low, positive divergence on gold as it makes a new low with a possible selling climax in there as well. And let's see if there's anything else I want to cover. Okay, yeah, we'll just wrap up here with the 60-minute charts of gold and silver. Again, via the ETFs, GLD and SLV. Here's the gold chart. Same chart I put up yesterday in the 60-minute, and this is what I said. Until and unless we take out this downtrend line, the miners will definitely face some headwinds. And so we were close to that. We pulled back. Again, I already made the case on the 15-minute charts, which we were just looking at with the divergent low and the selling climax. You can see that selling climax here with these red bars. We haven't seen volume like that in quite a while. In fact, here's a buying climax. You look back here and you can see these green bars, a big volume surge at this point, right when the gold peaked out back in middle of October, and that was really about the last time we've seen such a increase in volume. There's been some, but either way, this one's pretty big. It's enough to take note. Bullish divergence, as I pointed out. This even though we're in a downtrend. If we didn't have these divergences, I would have no interest in gold or silver right now. I put a lot of faith and stock into these positive divergences. They're not the be-all, end-all. They can become negated. In other words, the prices keep going lower. The MACD, the RSI moves lower until there's no divergence, but that's not the case yet. I would like to see a bullish cross back on the 60-minute chart here. But with that being said, we've been pretty oversold for a while. We've been have had these extended oversold readings, but you can see each one on the RSI is higher, each of these lows. In other words, bullish divergence. This, as I talk about a lot, this 1333 EMA histogram, that's just the two pairs, the 13 and 33 EMAs crossing. I put it in histogram form. You can see how well it defines up and down trends, and it's pretty much had gold on a sell signal since all the way back in, looks like October 21st, barring a tiny little blip here, a little whipsaw signal and a gap up. Other than that, it would have kept you out of gold. But, you know, based on the fact that these lines are pinching, this histogram's getting smaller, you look at really these things only stay in green or red territory for so long. In other words, there's no set amount of time, but when you have such an extended downtrend and you see the histogram look like it's poised to cross, and you have other signs of confirmation, more than likely we're going to get that soon. So again, we have a little bit of work to do to get up to this trend line. I've adjusted the fibs for today's lows, and you can see that 38.2, which is typically a minimum. There are other fib numbers. I like this, the minimum I usually look for on a retracement. That's from this move. And now it lines up perfect with the top of that target zone. That target zone I was looking at is really this big gap back here from, looks like, was that November 6th? Big old gap down in gold. So my initial target zone would be the bottom, anywhere from the bottom of that gap all the way up to the top. And being that that 38.2 fib is lined up there, a lot of people trade off fibs. That would have me favor a backfill of that gap, meaning a move up towards the top of the gap. Silver, almost the same story. I've readjusted the fibs. You could see, it's funny, in this case, the 38.2 fib lines up now almost perfectly with the bottom of my target zone, which is also that gap back from the, in this case, maybe it was a different date. Silver is November 6th. So either way, that I'm targeting that gap. The buy trigger or confirmation will be a move above this downtrend line. Bullish divergences in place on silver as well. The histogram is getting very close. It hasn't crossed yet. So these would all be, that might be an early buy signal. If they happen together, great. And the more bullish events that you have happen, the better the odds are for the trade. In other words, just across to the 1333 histogram might not do it. But if you get across to that, a break above that uptrend line, you have gold breakout as well. You see some bullish developments in the minors. That's what I'm looking for, trying to stack as many things into my favor. But again, trend is down now, but a lot of what I'm looking at points to most likely an imminent reversal here within the next few days. Okay, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed.